Natural gas stocks in Europe are at 50% of their capacity, which means that Europe is likely to profit from low natural gas prices to replenish its stocks by buying large quantities of gas. In this video, we will find out whether this will drive up natural gas prices and whether we should therefore speculate bullishly on this commodity. On natural gas, historically, an upward trend has started right from the early days of July until the end of August. As we can see thanks to the extract of the graphs from the forecaster software. The average return on this trade over the last 3, 5, and 10 years has always been about plus 32%, but the interesting thing to note is that the further back you go in time, the more this statistic loses effectiveness. This is because in recent years the dynamics of world gas trade have changed profoundly. What is imported through large ships, very different from what is imported from Russia through pipelines, has undergone an increase in exports in recent years. The trend then was accentuated by Europe's virtually complete abandonment of Russian gas imports as a result of the energy crisis that arose in 2002. So it can be said that this trend has seen two phases, an early phase before Russia's invasion of Ukraine and a later phase in which we are immersed now, where gas supplies come directly from the United States, but also from Qatar and Australia. In fact, European countries used to fill their gas supplies precisely in the summer, when gas is historically cheaper, and then use these supplies in the winter period. At the moment, European stocks are about 50% empty, which is higher than at the end of winter 2002. So it is precisely at this time that European countries are importing UFAC gas. This could lead to a rise in natural gas prices. Let's move to our platform and see what the graphs say. Here is the natural gas chart where we see all the rise following the invasion of Ukraine by Russia. Here then the subsequent decline, and now we are at this moment, at this period where prices have been for several months now, because we are talking since the beginning of January, in a side channel where prices are between 1.90 and 2.90. One interesting thing to note is how volumes are falling throughout this period of laterality, which makes us think that this period could actually be a period of accumulation before a return to price rises. Another interesting thing to note is that if we draw a trend line from historical highs and project it precisely to this December high of 2,222, we see that just recently prices have broken to the upside this trend line, which makes us think that in the medium to long-term prices could safely return to these old supports, now become resistance in the $5 area. If you would like to try this platform, I would remind you to visit our broker partner, KimuraTrading.com /S website, where you can try either a demo account if you want to practice or switch directly to a real account if perhaps you want to trade bullish right on natural gas. If you enjoyed this analysis, I invite you to try the forecaster software, a software through which you can calculate the seasonality and statistics of all the financial instruments in the world. Go to www.forecaster.biz, where you can try a free version and understand the potential of this software. You will find the link to try the software in description.